Every year, the Swiss watch industry generates billions, but the most valuable player in the game isn't actually a commercial business. It's a hyper-protected, tax-exempt charity. While rival brands bleed cash during global recessions, Rolex operates under a complex web of asset trusts engineered by its founder, Hans Wilsdorf, a system so legally airtight it effectively outpaces the entire global market. This is the structural blueprint of a multi-billion-dollar monopoly hidden in plain sight. And it all starts with a single legal loophole. To the average consumer, Rolex is the ultimate symbol of capitalistic success. It sells over 1 million watches a year, captures an estimated 30% of the luxury watch market, and generates nearly $10 billion in annual revenue. But on paper, Rolex doesn't exist to make a profit. In 1944, following the death of his wife, founder Hans Wilsdorf did something unprecedented. He transferred 100% of his ownership stakes in Rolex to a private entity, the Hans Wilsdorf Foundation. When Wilsdorf passed away in 1960, control of the empire officially shifted to this trust, meaning for the last 6 decades, the world's most recognizable luxury brand has legally operated as a registered charity. Under Swiss law, this designation grants Rolex a shield that its competitors like Cartier or Omega could only dream of. Massive tax immunities, total financial secrecy, and a structural layout designed to protect billions from the global market. To understand why this structure is so lethal to the rest of the luxury market, you have to look at how Switzerland handles corporate taxes. Normally, when a luxury giant like LVMH sells a diamond watch, a massive chunk of that profit is immediately chopped away by corporate income taxes, dividend distributions, and aggressive shareholder payouts. But Rolex operates differently. Rolex SA, the actual watchmaking manufacturer, funnels its massive commercial profits upward into its sole owner, the Hans Wilsdorf Foundation. Because the foundation is recognized under the Canton of Geneva as a charitable institution, it has historically operated with an incredibly robust, tax-shielded status. While competitors are bleeding capital just to keep their public investors happy, Rolex gets to retain an unparalleled percentage of its multi-billion-dollar revenue stream. This creates a massive unfair advantage. Since there are no public shareholders demanding quarterly dividends and no aggressive corporate tax drain, Rolex can take 100% of those retained billions and reinvest them directly back into the company. They can buy up their own supply chains, purchase prime global real estate, and fund decades of secret research and development. It is a self-funding war chest that makes them completely immune to market crashes. But tax resilience is only half the equation. The real masterpiece is how they engineered the watch itself to become an asset. The real masterpiece is how they engineered the watch itself to become an asset. Having a multi-billion-dollar tax shield is useless if consumers stop buying your product. And that brings us to the second pillar of Hans Wilsdorf's masterstroke, the illusion of scarcity. If you walk into any authorized Rolex dealer today with $50,000 in cash, you cannot buy a steel sports watch. You will be placed on a waiting list that can last for years. This isn't a manufacturing failure, it is an intentional distribution strategy. Rolex produces an estimated 1 million watches a year. Yet, by tightly capping the supply allowed into the market, they ensure that demand always outpaces production. This creates a massive secondary gray market where watches instantly flip for double or triple their retail MSRP. To the public, a Rolex ceases to be a depreciating consumer item. It becomes an investment asset that reliably beats inflation. By transforming a timepiece into an engineered asset, Rolex achieved total control over its consumer base. People don't buy a Rolex to tell the time. They buy it to park their capital in a stable, portable currency. But how does an independent foundation outpace massive luxury conglomerates who control dozens of global brands? To understand that, we have to look at the corporate warfare happening behind closed doors. In the modern luxury landscape, independence is a death sentence. Almost every luxury brand you know is owned by a massive corporate conglomerate. Corporate titans like LVMH or Kering buy up heritage fashion houses, aggressively cut costs, and answer to public shareholders who demand immediate profit growth every single quarter. When a global economic recession hits, these public conglomerates bleed heavily. They are forced to discount inventory, cut marketing budgets, or pivot strategies just to protect their stock price. But Rolex is completely immune to Wall Street panic. Because the Hans Wilsdorf Foundation owns 100% of Rolex, there are no public stocks to crash, no activist investors to appease, and no quarterly earnings reports to publish. This gives Rolex the ultimate strategic advantage: patience. While rivals are playing short-term defense, Rolex can play long-term offense. They can spend decades securing the world's most expensive real estate, buying out the exact component factories that supply their rivals, and out-investing everyone else in global marketing. It's an asymmetric business model that doesn't just protect them from the market, it allows them to outpace it entirely. As we push deeper into the late 2020s, the global luxury landscape is shifting rapidly. The rise of digital secondary markets, erratic economic conditions, and changing consumer tastes have forced many legacy watchmakers to rewrite their playbooks. Yet, Rolex remains completely unbothered. And that is because Hans Wilsdorf didn't just build a watch company, he engineered a self-sustaining financial ecosystem. By locking the brand inside a private, tax-resilient asset trust, he permanently insulated Rolex from market crashes, corporate takeovers, and internal family drama. It is a legal masterpiece that allows a luxury brand to operate with the absolute ruthless efficiency of a corporate monopoly, all while flying under the radar as a registered charity. As long as the world values status, scarcity, and prestige, the Hans Wilsdorf Foundation will continue to outpace the open market. Competitors will keep fighting for quarterly profits, but Rolex will keep playing the long game. Because in the world of luxury business, the house always wins. and Rolex built the ultimate house.